Good day, all. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for the evening, as we're now here on Wednesday, the 7th of August, a pretty day for me at least, and it is 2024, just after 4:30 p.m. I'm putting this out early. I have a birthday party I have to go to, my wife's, and it's her birthday and all her friends and all this, so I won't be free tonight. That is for sure. We got to leave shortly. So I wanted to get this out to you. As you can see, yesterday I talked in my newsletter about a dead cat bounce. I have kittens everywhere. We have one outside. We thought it was 7 kittens. We counted an 8th today. And my wife already got half of the cats gone, adopted. She'll get them all done before it's through. But to make a long story short, a dead cat bounce is when you get a bounce like you had a terrible Monday, you came up on Tuesday, you had held most of the 200-day averages on Monday, and you bounced away from that. And then we reversed. And it's all about the verve. Dead cat bounces are markets that go down. You get a bit of a bounce, but you can see on the chart, they're struggling. They're late in the day, they start selling off again, and that's what was going on. And that's why I called it a dead cat bounce, which means be aware you could go down again to challenge the recent lows. That seems to be what's going on. I know you see all these prices. Believe me, when the markets reopened, they were all substantially lower than this, headed towards the lows of the session, not at these prices. We'll see if that lasts. The gold market, no, it was up at 1230, but it lost ground from there. And the same with this. You were down 50 cents in the silver in the last quotes, and you were down closer to 393, 394 in the copper market, the last quotes of the day. And that bothers me. Copper's the canary in the mine. It's used in all these products. Why is it falling apart? Something's not right. Energy market's up. Now, I want to give you all fair warning. I read a Reuters article at about 3:34 o'clock today that all of a sudden Egypt has decided to tell airplanes during 3 hours tomorrow they cannot fly in Iran airspace. Stay away from Tehran and that. When pressed about it from the Egyptian Air Ministry, they said that Tehran said military exercises. Uh-oh. My horns go up right away. Who's doing military exercises when we're all worrying? Is Iran going to hit Israel direct? Is it going to have its surrogates? What's going to happen here? I think that, you got to be a little cautious tonight. You read those things. And do I think that Egypt has an in with them? Absolutely, Iran. Why do I think that? Because so many of the trade talks, or peace talks is the right word, have gone on in Egypt. Everybody's using that as the country they can go to. Qatar's another one, but it's primarily been Egypt. And the last thing that the Iranians want to do is by accident shoot down civilian aircraft of Egypt's. Just bringing this up, you put pieces together and sometimes you can solve a puzzle. Tomorrow morning, you get the weekly jobless claims. They're expecting at 240,000. That's a big number. The May wholesale inventory sales data will be updated tomorrow at 9. They're expecting it up 0.2. The EIA natural gas report comes out around 9:30. They're not looking for a lot, maybe 30 billion cubic feet put in. The Federal Reserve in the afternoon came out with these numbers. So the consumer credit fell a bit from the expectation, down about, about 800,000? 800 million, I take that back because this is all in billions that you're dealing with. Your revolving credit down 1.7 billion. So I look at that and that's not bad info, all right? But let's go to the chart action to see what this is about. And let's go right to it. First, you haven't had a bounce yet from the time you've gotten underneath the 18-week moving average of closes. This happened back here, and it happened back here, and then both times you snapped back up. I do look for a similar event of snapping back up, but I'm not smart enough or good enough to pick where the snap will hit from. But you are straight down. If you sell down here, you're selling into a very oversold area. That's the best thing I can say. When you look at the charts, you get to see that. You were just over 5,700 You're now 5,200 today. You got down there 5,100. As I said, we're approaching that 10% area now in these markets. QQQ and the NASDAQ had been there. You can see how the trend is down on the swing lines. So today's high is very important. If it's taken out on Thursday or Friday, this would be a bear trap and signal that the market, to me at least, would be through on this downside until whatever tomorrow's low would be. All right? So that's what I'd be looking at. That, to me, is a key number in the market. And that opens the door for another challenge of the 5130 level, the 200-day average of closes. You're riding the lower Bollinger Band, so the Bollinger Band can't be your support. You're already on the right-hand side and riding it down. If it continues down, then the 200-day average will be the next area to look at, and you're oversold. So deploying new money in an oversold condition into a key moving average, not my cup of tea. It might be yours. When we look at the NASDAQ, same thing. Now you fought your battle and you're losing it at the 200-day average. The support is 17,751, 200 lower almost here. That's the Bollinger Band, but you can see how it's grabbed on and it's just pushing it down. Are we embedding? No, both numbers are not under 20, nothing there, just oversold. In the Dow, you might be going right back to this number and more similar to what I showed you in the S&P. You're already riding that number, the Bollinger Band down, so it's the 200-day average that becomes front and center support, and the same in the Russell. You're down to 20,3370 roughly, so that's the area you've got to look at. Could it go even lower? Of course, anything can happen, but this is not the area that if you're somebody that watches overbought, oversold, you're down a lot. Is this the best spot to be putting out new shorts? No. And again, so many of the markets have outside days to the downside. Mark them on your chart. If you see them get over it, it's a warning sign that short covering rally, one with some real power, might happen on you. In the 10-year note, notice how the market is suddenly pulled back. And one of the things I teach you, and I know people always write me or call me and they'll go, Ira, it's going, you don't understand, it's going. And I keep telling them, it's rare that you spend more than 5 days over or under in a futures market, the Bollinger Band, before you get a snap in it. And that's exactly what is going on right here. 5-year note, same thing, getting your snap right after that occurred. In the dollar index, you tried to stay under the Bollinger Band for a couple of sessions. You moved to the right-hand side. If you get tomorrow, we wake up and there's a full-fledged war or an attack on Israel, the first thing you have to decide for yourself is it surgical or all fronts hitting Israel at one time, and it looks like it's going to be protracted. Protracted means we have to get involved potentially, and so do the other allies in the region of Israel to stop the air missiles. The U.S. has already said it will not directly attack Iran. However, if one of our ships get hit, you can bet that's off the table. All you need to do is see a ship of ours get hit by Houthis, whatever, and Iran involved in it. Wait till you see the wrath of the U.S. I mean, Biden will try to control it. I doubt he'll be able to. All right? But I don't expect that to happen. I think that the warlord, Iran, is saying, you leave those ships alone. That would be my guess. Otherwise, who knows what happens. Lower highs, lower lows, and you're down here. We'll see what goes on through that. In the euro, the market has gone from upper and lower Bollinger Band. I wouldn't know how to trade that. This is a vertical price move that I would never chase, all right, or have my clients chase. They generally pull back on you. In the pound, you keep working lower and lower and lower. Do you know what's going on there? I hope you do, with all the riots that are taking place. They deployed tonight 6,000 police around the country in order to try to quell the riots. This has to do with immigration and the new government's approach on things. It's been a problem that's been brewing, and it's nasty, to say the least, and this is hurting what's going on there. When you look at the Bitcoin moves, I don't know. I don't see that as a bullish move, but I know other people do, and I keep going, what do they see that I'm not seeing? And I'm sure it's something, don't get me wrong. But it's a bear move. All you did is bounce back and try to get inside the Bollinger Band. I'm not seeing that. On the energies, well, obviously anything that happens, if there is a Mideast event, be careful. You could be up here before you know what's going on, so we'll find out what that all means. Same thing in our oil here, so that's what I think is going on. Traders were buying this in front of that. Libya saw its production. They declared force majeure today. So, you know, they come and they go. At the same time, the U.S. on oil has seen a record amount, 13.4 million barrels a day last week. And, you know, these are serious numbers. We keep cutting the amount of rigs gradually. Take a look, you'll see. And our production numbers going up. And it's just that our crews here have figured out the technology of fracking, and they have this down to a science. And there's still plenty of wells that can be dug. Ones that were already in, I wonder how much oil was left with these new technologies. They may eventually revisit them. And if you look at gasoline, it flip-flopped. You suddenly have higher lows, higher highs. A lot of resistance right here at 240, 238.37. Look for the resistance there. And once you lost, and I can't explain this enough, all right? Let me get over here. Yesterday, you lost the bearish embedded reading. You have a reading over 21. You heard me say, unless it re-embeds right away, the odds favor price is going to make a run for the closest moving average, which happens to be and often is the 18-day average of closes. Kaboom. So if you take that course and you catch one trade like that, I promise you, you're going to go, I'm hooked. Okay, I'm hooked. Do they all work? Nothing works all the time, but there are ways to put stops on if it goes against you. What's wrong with from the point of entry you have? Give it $100, $200, whatever dollars you think appropriate, okay? Watch. If it's going to work, it generally works right away. So that's something to think about. Got it? I don't know how else to make that clear. It's an idea. If I had something that worked every time, I wouldn't be here. All right? That's not how it all works. All right. So, you know, you hear me talk about all this and all these different terms that I throw at you, and it's a great time for you to take advantage of the learning. Let me get you over here. And it's our guide to technical indicators that explains all of this. A two-part set comes to you as a PDF, by the way. And in the PDF, I'm going to cover all that you see here. So you're going to hear me talk about chart action. I start off with the chart with nothing on it whatsoever, because I'm looking at patterns, trying to talk to you about stairs, that they're marching up or down. We'll talk about trend lines from time to time. I draw them here. I love moving averages. I use them all the time. There are many momentum oscillators to choose from. This explains most of them. Market sentiment, which way are the traders leaning? It could be commitment of traders, or there's a market sentiment index. Elliott wave theory, Gann, Fibonacci, talks about its spread relationships. The Arun indicator, which I have a free course on, it's right there. Option primer gets you going with it. And last but not least, and it's so important and people forget about it, money management. How do you take this? We just talked about losing an embedded reading. I said what I've learned is you got to have a stop on it from your point of entry. When I'm ready to teach that, I will. I'm not there yet, but I am working on it very hard. And I'm very close, but not there. So you can either give us a call. My staff will work with you. You can go to iraepstein.com. When you go to the top right, it'll be free offers. And there'll be an icon if you move your cursor up to the top here. Give that a click. It'll take you there. Once you're in the free offers, you're going to see that you can click on any of them. They'll go into a cart. At the bottom of the page, you enter your email address, your name, and we can get everything out to you. I'm Ira. You have yourselves a great day, and I will talk to you all tomorrow morning. You take care.